All right, welcome back to the Emerging Growth Conference. Happy to present our next company. We have Deep South Resources. It trades on the OTCQB under the symbol DSMTF, as well as on the TSX under the symbol DSM, and is a mineral exploration and development company. Deep South is actively involved in the acquisition, exploration, and development of major mineral properties in Africa. Please welcome its president and CEO, Pierre Leveille. Welcome, Pierre.
Thank you. I'm pleased to be here with you.
We're looking forward to your presentation. The floor is yours.
Thank you. What you're about to see is a pretty rare opportunity. It's not very often that you will see a project of this magnitude in an exploration company. Basically, we are a TSXV listed company, an OTCQB listed company. We own 100% of a very large copper porphyry project in the south of Namibia. Namibia is a low-risk and mining-friendly jurisdiction, one of the best, if not the best, in Africa. The project is a large tonnage, low-grade project. We have a proven leadership to develop the project. We have a lot of experience in finding, developing, and operating Tier 1 projects in Africa. One of the things which is important about the project is that it's amenable to low-cost bioheap leaching, which is very low CapEx and low OpEx compared to more classical routes. Just on a side note, bioleaching is not a new technology. It's a robust technology existing since over 40 years. In the copper industry, it's mainly used in Chile by major companies such as Anglo American, Codelco, BHP, Barrick, and many others. We have in December presented a preliminary economic assessment that was showing very robust economics for an open pit mine producing 90 million pounds of copper equivalent per annum at a cash cost of $1.34 per pound and a capex of $340 million US. That gives us at $3 per pound of copper an after-tax NPV of 950 million US with an IRR after tax of 30%. Of course, suffices to say that that's at $3, so you can imagine at $3.50, $4, because the price of copper today is just a little bit under $4.50. We're advancing toward the feasibility study. We are at the moment drilling on the what we call the higher grade area of the deposit, where we have already intercepted some very nice interception with pretty high grade compared to the average. The average is at 0.31%, and when you see a 152 meter at 0.47% and a 30 meter at 0.81%, you can see that yes, there's higher grade in that project. We also have started some more metallurgical test work, including bioheap leaching test work, high pressure grinding roller test work. We are testing another heap leach technology also at the same time. We have also started a lot of scoping study on the project. I will give you more details a little bit later in the presentation. We have 145 million shares issued, about 4 million Canadian in cash, with no debt. The largest shareholders are Teck Resources with 16% and management and directors with 14%. I will give a brief overview about the improving copper market. Recently, Pierre Lassonde, the chairman emeritus of and co-founder of Franco-Nevada, mentioned that copper is the most greenish metal for the green revolution and EV revolution that we're in at the moment, and it will stay like this for the next 30-50 years. People have to understand that without copper there's no communication, without copper there's no transportation. So at the moment there's a serious increase in demand from China. There's also a very tight market because global mines are expected to are reducing their resources are depleting, so their production is going down, and there's not enough new mine coming in production to balance the increase in demand and the shortage of supply. So and that will probably stay like this for at least the next 10 years. We know that, just as an example, between 2014 and 2020, there was only 5 new mines that came in production. And we know for the next 5-10 years, it's probably going to be the same. So there's a serious need for a project like ours and others. One of the factors why the copper is so much in demand is the electrification of vehicle revolution. It's known that the internal combustion engine is taking, in average, 22 kilos of copper, per vehicle, and a battery electric vehicle is at 80 kilos. So you can see it's 4 times more. At the moment, there's 280 million vehicles on the street in the United States, and there's only 1 million electric vehicle. So it gives you an idea of the growth potential there, but it gives you an idea also of the potential for the growth in copper demand. And I'm not talking about electric buses, trucks for short and medium hauls, even long hauls, vessels. Electrification is going everywhere. It's very important to understand that we need an infrastructure also to charge these vehicles. So by 2030, it's expected that over 20 million charging points will have to be deployed globally, and that's 250% more copper than in 2019. So it's a huge revolution. But at the same time, you must keep in mind that there's the infrastructures program in many countries in the world that will demand a lot of copper. Crypto mining is a very power demanding industry. That industry is in full growth at the moment, so it needs quite a lot of copper there. Same for the cloud storage. So there's a huge demand for copper coming. So it's very important to keep copper in mind, and that's certainly a very good investment for the next 10 years. Coming back to Namibia, it's a very low risk and mining friendly country. It's governed by a stable parliamentary democracy with a fully independent judiciary system. It's a transparent system for mineral and surface title. It was ranked #1 in policy perception and amongst African countries, and 14 globally in the 2019 Fraser Institute mining survey. It's also, if you look at the IMF and World Bank website, you will see that it's always ranked #2 or 3 as one of the best jurisdictions to invest in Africa. Mining is a very important business in Namibia. It's 25% of GDP and 50% of the exports. So you can see that it's a very important business, and that's a reason why we're very well supported by the government. The project, you see a picture there, is situated in the south of Namibia. It's a huge area. It's 370 square kilometers. We have about just a little bit over 5 billion pounds of copper in the ground, delineated now, estimated by a 43-101 resource estimation. You can see that the area is pretty rugged, but when you look at, I will show you some other pictures in the next slide to show you what the area looks like and how the operation will be lined up. It's a pretty large area. It's 370 square kilometers. The deposit lies on 2 square kilometers, so you can see there's still quite a lot of space for more exploration on that license. It's situated completely in the south of Namibia, near the border with South Africa, near the Orange River, where we will take some water for the operation, pump it and pipeline it to the project. It's about 15 kilometers from the project. The main commercial road coming from Cape Town, South Africa, is crossing the western edge of our concession. And along that road, there's a low voltage power grid that we can connect for the mining camp. But for the main operation, we need to connect to the high voltage power grid that is about 85 kilometers to the east. At the moment in our PEA, we estimate that we pay for the full capex to connect to that grid, but there's quite a lot of programs in Namibia, including development banks program that will make that probably we will have to pay only 50% of the capex. But also what is very important Namibia is a very sunny part of the world. The average is 320 days per year of sun, and in that specific part of Namibia, it's 360 days per year of sun. So you won't be surprised that we have started a scoping study recently with Knight Piedzold to estimate the our capacity to produce solar power in that area. We're pretty sure it's going to be the case, and we think that it will improve our economics. That's the same picture on the top right-hand side. That's the deposit area. You can see, as I said, it's pretty rugged. But where I took the picture on my back, what you're seeing is the picture on the left-hand side at the bottom. It's a very extensive area, which is flat. So that's where we will have most of the operation and the mining camp. You can see at the bottom a Google Earth map where on the right-hand side, the purple area is the pit area. So that's where we have the deposit at the moment. We will do the crushing in that area, and then we will send the crushed material on a conveyor belt to the flat area where we will have the heap leach and all the extraction technology fixed there, SXCW and other stuff. On that slide, what you see at the bottom right, on the right-hand side at the bottom is the 4311 resource estimated so far. It's 457 million ton at 0.31% copper and 342 million tons at 0.29% in the inferred category. In the PEA, we use only the indicated resource. It's a project that over time has seen quite a lot of work, 66,000 meters of drilling, a lot of metallurgical tests, and many other stuff, including a feasibility study done by Minproc in the 1990s. And we have all the reports, all the data. We still have cores on site, well preserved. So it's a very important asset for us. We are convinced that the grade has been underestimated. One of the reasons for that, what you see there on the right-hand side is a cross-section of the overall deposit. And you can see that most of the drill holes start from surface and going down to 350 meters. That's where we have estimated the resource. But you can see also that we have drilled down to 850 meters, some incline holes. There's still some very high grade going deeper. And at 850 meters deep, it was still mineralized. So we don't have an idea where it stops. So we know that we can most probably double the tonnage going deeper. There's also some potential at surface, open-ended at surface and open-ended deeper. Very important factors there is in the center of the deposit, there's an area that we consider a higher grade area because there's quite a lot of high grades pods that have been hit in the past. But one of the situation is this. All the companies that came on that project before were treating that as a, let's say, quote unquote, classical porphyry. And in general, that type of porphyry is disseminated copper pretty evenly distributed over the depositional area. So what they do in general, they chase tonnage. They don't bother so much about the grade. When they build, let's say, the database and build the project or the deposit, and they have drilled vertical holes spaced by 150 meters, and you can see most of the holes are vertical. So in the past couple of years, we have identified a lot of shears and faults that are in the center of the deposit and in many other areas of the deposit. And these shearing and faulting structures tend to be vertical or subvertical. And so when you drill vertical spaced by 150 meters, guess what? You miss quite a lot of that high-grade material. And that's exactly what has happened in the past. One of the reasons also why we have these shears and faults, which is not necessarily usual in porphyries. There's some that have that, but it's not very frequent. This is probably the oldest porphyry deposit in the world. It's 1.8 billion years old. It's Archean. And as such, it has seen quite a lot more transformation, geological transformation, than most of the younger porphyry deposit that we see on the western edge of Americas. And through these transformation, there was shearing and faulting events that have created these vertical structures and have remobilized and redistribute the mineralization along these structures. So if we want to see more high grade and have a better idea of the average grade in that project, we need to drill incline holes to cross these shears and faults, and then from that point we see already that we have more higher grade than what we were thinking. So we're convinced that the 0.31% copper is underestimated. The other reason we think like this, it's because there's molybdenum in the system, and we believe that it could increase the copper to copper equivalent by about 10-15%. And there was only 14,000 meters that was assayed for molybdenum. It's us during the 2010s. So we need more data. We need more assays of moly to include that in the resource. So that's another point where we certainly can increase the grade. Another factor which is very important about this project is that when you have a low-grade project, it's important to find the right extraction technology to extract the metal at low cost and low capex. Looking at all the database, we found that Mintech of South Africa, a world leader in bioleaching technologies, has done some tests early into the 2000s, and they were showing recoveries up to 95%, sorry. And so we dug deeper into that technology, and we realized that the ore we have at Hybe is perfectly suited for that type of technology. It's a very simple mineralogy, and it's 98.5% chalcopyrite, 1% bornite, and just a thin sheet of oxide. It's very important to understand that leaching these type chalcopyrite and primary sulfide, it's a long process. If you want to accelerate the process, then you use bacteria, which comes naturally in the ore, in the minerals, but we add, in some cases, we add a specific mix of bacteria in the leaching pads to kickstart and improve or accelerate the leaching, and that makes that we have a better cash flow, a faster cash flow return. So it's nothing very tricky. It's a typical heap leaching with an addition of bacteria. Something important also is that we have a high content in pyrite, and it's important for a couple of reasons. The first one is you want the bacteria to be at their best activity, and to do that, you need to keep the temperature between 55 and 70 degrees in the leaching pad. In the area where we are, it's not a big issue because it's a very hot area, and the rock itself comes in the system at about 60, 70 degrees. So it's very hot immediately at the start. But when the pyrite is leaching, it self-generates energy. It's exothermic, so it helps keeping the heat in the system. And also, what is good news is that the pyrite is creating also self-generating sulfuric acid, so it reduces substantially our acid consumption. The last point about the technology is what is very important here. It's that, again, we come back to the fact that it's a very old porphyry, and over time the rock has transformed from volcanic to become metamorphic. And from that point on, the it's still a very hard granite, but it's a little bit softer than the typical volcanic granite. And as such, we don't need to use grinding and milling, which is a very important factor, because grinding and milling are extremely high capex and very high energy demanding, and of course the operation costs are pretty high with that. So being able to avoid that, it's perfect. So we crush the material down to 12 millimeters, then we use high pressure grinding rollers to bring it down to about a little bit under 5 millimeters. We agglomerate the material, and then it goes to leaching. It's a pretty simple operation. So that's why we can give we have been able to produce a very robust PEA. That's what you're seeing here. Mine life is 24 years, based only on the indicated resource. We have taken the grade of the indicated resource 0.31%. It's a throughput of 20 million ton per annum. Strip ratio is 141:1, which is very good. Copper recovery 80%. Our test last year of bioleaching has showed recoveries up to 96%, but with sustainable on a long-term period of 80 to 82%. So that's why we take 80%, but we believe we can increase that probably to 85, 87%. With more tests, of course. And the cash cost is $1.34 per pound with a capex of $340 million US. When you look at the project economics, at $3 per pound of copper, as I said in the first slide, we have an after-tax NPV of $950 million US and a payback period of 4.23 years with an after-tax IRR of 30%. Now you can look at up to $4. The numbers are pretty interesting. The after-tax NPV is 1.6 billion and the IRR is 42%. It's very good. However, when you look at the payback period at 4.23 years, it's a little bit long. But keep in mind one thing. If we just add 10 to 15% on 0.31%, because we count the, let's say we add the molybdenum in the system, suddenly we're at 0.35% without having done anything else. Of course, I said that we need more data for moly, but so far that's what we look. It's just an example I give you. So at 0.35%, the payback period falls back at 3.5 years, which is a lot better, and then all the economics improve immediately. So you imagine if we can go over that 0.35% with the drilling we're doing now, adding the moly and having more high grade, then that project has and the work we do now can add quite a lot of value on these economics. There's other stuff also that we're doing. As I said, solar power generation can reduce the cost. We are also working on a flow sheet optimization at the moment that seems to give very good results. So we're doing quite a lot of work now to improve these economics. And we're very confident by the end of the year it will be the case. What you see on the right-hand side here, the map where you see pit 1, 2, 3, and pit 4, that's the center of the area of the deposit. That's where we have what we call the higher grade zone. And you can see they're separated in 4 different pits. Now, what we've done recently, the drilling that we're doing now in that specific area, we will drill the 4 pits. We've seen that we hit more high-grade material, like I said in the first slide, 152 meters at 0.47 with also 30 meters at 0.81%. It's very good results, and we have those type of results on a regular basis in that drilling. But also, what we see is that it extends outside of pit 2 and goes, in the direction of pit 3. So most probably these 2 pits will link together, and we will add tonnage in that specific area. At the moment, we were evaluating the tonnage at about 160 million ton, adding pit 4. And now, who knows? It's like if we can join these pits together with high-grade material, that will be very good news. Next slide is just a cross-section of pit number 1. It's just to support what I was saying before. When you look at that, you see an adit that has been dug in the mid-90s. On the right-hand side, it was drilled spaced by 50 meters. They hit quite a lot more high-grade material. On the left-hand side, spaced by 150 meters, they have hit less high-grade material. But the most important point is when you look under the adit, and a little bit over the adit on the right-hand side, you see 4 or 5 drill holes, one very deep, that are inclines. So when you drill an angle, you hit high-grade material more often. And here you can see it was on every drill hole that has been drilled inclined. So that's very important, and that's why we know that the grade has been underestimated, and that's what we're doing at the moment. We're drilling to improve the grade. And other factors also. That's a brief overview of the license area. It's in the center. It's called Hybe. That's where we have all the resource estimated. That's the area of the deposit. Hybe West, East, South, Southwest are future exploration targets. We have identified some alteration zones in these areas that are pretty that are showing quite good potential, but they're there for future development. We already have quite a lot of the size of the deposit is pretty large at the moment. So, but we know we can add tonnage and going deeper and at surface most probably also. So for year 2021 and early 2022, we have started the feasibility study program. We're at the moment we're drilling in the higher grade zone of the project. It's a program of 10,000 meters of infill drilling. The goal is to, sorry for that. The goal is to estimate and measure the resource over that area, increase the grade of that area, and also increase the grade of the overall deposit. We have started more metallurgical work, bio-assisted leaching, HPGR, as I was saying. We have also recently contracted Knight Piésold, pretty well-known engineering firm, for scoping study on water usage, alternative power solutions, and leach pads assessment. That's underway also. So what you will see from now on to the end of the year is drilling result up to at least mid-August every month. And you will see some bio-assisted leaching and HPGR results probably every month starting by the end of June up to the end of the year. You will see these scoping studies results that will come out. In probably October, we will have an updated resource estimation done by the MSA Group in South Africa. And early 2022, we will have an updated PEA or most probably a PFS, pre-feasibility study. We think we will have all the data needed to do that. So there's as you can see, there's a very important news flow coming every month. And right after that, if everything goes well, we will resume some drilling in 2022, and we will start the engineering design for the feasibility study and also environmental and social impact studies. So that's who we are. That's where we... I suggest that if you want to look at the team, you go on our website or look at the presentation by yourself on our website. We are extremely undervalued at the moment, but we believe that with all the work we're doing at the moment, we will get that straightened by the end of the year. We're pretty convinced we'll have a very good added value with the project. So this is who we are, and if you have any questions, please, you're welcome to ask them.
Thank you so much for your presentation. We do have a few questions for you. So in December, a projected product cost, you stated earlier, was 1.34 a pound. Where do you see that going over the next 24 months in relation to the price of the metal?
The cost of operation at $1.34 per pound will not necessarily move so much. The metal, yes, has an impact, but not so much. It's we think that by December, the price of copper will still be around $3.75 per pound of copper, and you can see our cost of operation will remain at $1.34 or very near of that.
So, which majors are already producing copper in Namibia?
There's no major companies producing copper in Namibia at the moment. There's majors producing zinc 100 kilometers from where we are. And there's also some in South Africa, about 200 kilometers where we are, in producing zinc. There's B2Gold was producing gold. There's a project in the northern part of Namibia that produce copper, but it's called Chudi. I think it has ceased operation at the moment. But so copper is not there. There's a lot of small operation for copper in the center and north of Namibia, but we are in the south. We're in a completely different geological environment.
So you do have cash on hand. How long will that last before you need to go to the market and raise some more? With the budgets we have so far and all the work we're doing now, we think that arriving February next year, we will still have about $1 million in cash, Canadian. So
we will have to go to market most probably early in 2022 to fund the program for the year 2022. Maybe we will accept some funding, next September, October, November, if there's opportunities to do so at the right price.
Talk a little bit more about the proven reserves on Deep South's area, and when was the last 43-101 released?
The last 43-101 was released in January 2018, and there's no reserves. There's no proven reserve on the project. There is inferred and indicated resource. For the next updated estimated, the updated estimation that we will do for next October, we will have a part of it which will be measured, but then the reserve will come from the next drilling program right after we complete, the program we're in now. So we need more drilling to go to proven reserves.
So what other rare earth metals are there on the property, and do you plan to focus on any of the others?
There's no rare earth metal on the project as we know at the moment, and there's molybdenum, a very little, little bit of cobalt and nickel. So that's about it. And cobalt and nickel are in very, very low grades, so we're not even sure they will be economic at the moment. So what is economic? It's copper and molybdenum.
So with the growing demand for lithium and EV cars, will you be looking to acquire any lithium mines?
Not at the moment. We're not focusing on that. Lithium is not our specialty. We are really people that have a long experience in copper and gold. That's where we stand. So we know that the demand in the with the EV revolution, we know that copper will be highly in demand. It's already the case, and so we're very comfortable with copper. We don't want to diversify into commodities we don't know well.
Someone wanted some clarification, asking if you're going to start production in 2022, and if so, can you narrow that down to a quarter?
We won't start production in 2022. 2022 will be a pre-feasibility study, and 2023 will be a feasibility study. Only after that we can think of starting production. So you don't figure out any production before the end of 2023, early 2024. And if it's the case, it will be on small scale before going on to a large scale. And one of the reasons for that, it's always recommended in heap leaching to start at a very low volume to test the concept correctly and to understand, if you have flaws that you can correct with the engineering, because the heap leaching entails that you will pile gravels up to probably 20-meter high. So imagine if you have a blockage in the middle of that, you just cannot resolve the issue. So it's very important. So pilot plant probably by the end of 2023.
And what do you anticipate the dilution to be in 2022 if you do another funding there in relation to what you will need to raise?
Well, we cannot anticipate dilution in advance like this. It depends on the market and where we will be in the market. But our goal is to raise money at a higher price to limit dilution as much as we can. But we're still an exploration and development company, so our share are not based on profit, but based on the anticipation of the markets. So, but as I said, we do a lot of promotion from now on to the end of the year. We have a very good news flow, so we're confident we can raise the image of the company and also the value of the company, and with that, the market cap, of course, and limit dilution.
Do you have a private placement outstanding currently, and if so, what are the terms? No,
there's no private placement currently. As I said earlier, it will be most probably early in 2022, or if we have some proposal, but nothing before September or October. We need to get out more news, and we would like to see a better market cap.
Talk a little bit about the Hybe Project. Is that land leased, and does Deep South have 100% control over it?
Yeah, it's the land is owned by the government. As you have seen, it's pretty rugged area, so there's no farms or no inhabitants on that specific area, and so we have the exploration titles, and which are underground titles, and the surface title are with the government. And that's not a big problem. In that area, there's nothing. So the government would be very happy to see some action there. The most nearest town is 25 kilometers. You see, there's not a lot of inhabitants very nearby.
Has the Porphyry deposit been producing in the past? And if so, why was it abandoned?
No, it has never produced. But let me get it right. There was a very, very small production in the mid-50s, but that was a very, very, very small leaching activities. They were leaching. You see a lot of copper staining on the rocks everywhere. You see these green patches with malachite, chrysocolla. So they were just digging that and leaching that. But it was a very, very small operation. We cannot even say that it was real mining. So, but I never had a mine there.
So after the completion of the feasibility study, how much time and capital will it need to build the initial small-scale pilot plant?
The evaluation, the estimation for now is $21 million US, and it takes about 6 months to put everything in place.
And last question, what are the reasons for the low valuation of the company?
Well, there's a lot of reasons for that. First of all, it's important to keep in mind that most of the value in exploration companies always come from drilling. And we are listed since the end of 2016. And at that time, we came to the market with a project that was already 66,000 meters of drilling. So we were not in need of doing drilling. We were in need of doing a resource estimation, PEA, do some metallurgical work to find the right extraction technology. So we had to do that before. And that does not really excite the market, let's say. So we're, for the first time, drilling the project deep south as the owner of the project. And so now we know that we have a good chance to bring quite a lot of added value. So that's one of the reasons. The other reasons are, we follow the price of copper, and the price of copper up to about September last year was always under $3. We were having a project, that is still economic under $3, but that's not the same today. And most of the project similar to ours, up to last September, were all very undervalued. So, and a lot of them are still undervalued. We still need to do a lot of promotion on these projects.
All right. Do you have any final remarks, Pierre?
But the only thing I can say is that we're just starting a very exciting period, and we will have a very important news flow with a lot of activities. So I can only invite you to stay tuned and follow our story and buy some shares, because we will be a very exciting story between now and the end of the year.
Perfect. Well, thank you so much for your presentation, and we look forward to your future updates.
Thanks. Thanks so much. Have a nice day.
Thank you, you too. All right, everyone, we've got a few more companies that are going to present in just a second. We're going to take a quick 5-minute break, and we'll be back at 2:15 Eastern time. Remember, you're going to see a black screen for a while. Just hit the refresh button and we'll come right back on. Thank you.